Is the Dallas, Texas housing market on the precipice of a massive collapse in 2024 that's going to cause home prices to go down not just by a little bit, but by as much as 20 to 30% over the long run? Well, let's dig into the data so you guys can know what's happening in Dallas's housing market right now. We can see, looking at data on Reventure app, that Dallas has been fairly insulated from this housing decline so far, with prices only dropping 1.7% from their peak in mid-2022, compared to a market like Austin, where prices are down 17% in the same span. So Dallas, it's held up fairly well so far. However, I think that could change soon, because we are starting to see a massive uptick in inventory of homes for sale in Dallas, with there now being almost 16,000 homes for sale across the metro, which is nearly 4 times higher than the low we experienced during the pandemic. So those rising inventory levels across Dallas, particularly up in Collin County and out in Denton and even in some parts of urban Dallas, they're a signal, they're a prelude to price declines. Because when you see the inventory and the supply of new listings go up very, very fast, that's the signal that buyers are out of the market and sellers are getting more desperate. This is a trend that Redfin actually noticed recently as well. They just released an article on the US housing market talking about how new listings posted their biggest uptick in 3 years, rising 13% year over year. However, here's what Redfin noted about Dallas. They showed that Dallas and Fort Worth had the largest increase in new listings in America, 36% growth year over year in new listings in Dallas, 30% in Fort Worth. And the result is we're now seeing lots of sellers start to get a little panicky across the DFW housing market, particularly investors. There's lots of investors invaded the DFW housing market in 2020, 2021, in the first part of 2022. The investors, they love Dallas. And on one hand, because it's such a good, strong economy, right? Dallas is one of the most well-diversified, largest economies in America. It's in a business-friendly state. It's in a business-friendly city. There's lots of population growth. So the investors love it. The problem is that too many investors came into DFW during the pandemic, and now many of them are being forced to sell because they can't get the rents that they need and because the vacancies are going up. So if we look here on Zillow and look at all the different rentals on the DFW metro, we can see, if we zoom in, there's just an astronomical amount of rentals, particularly up in a town called Little Elm in Collin County. I mean, take a look at all these rentals on the market. This is a 3-bed, 3-bath, 2,300 square foot house. You can see actually that this house has been listed for rent since November, and it still hasn't rented. Back in November, it came on the market at $2,450 a month. Now it's down to $2,300 a month, and this has just been the story across the DFW housing market over the last year. Surging vacant rentals, lower rents, and investors starting to sell. And what's interesting, if you're a homebuyer investor in Dallas, is you can actually dig into this data more granularly and look at different zip codes in terms of how much inventory is on the market, particularly what's the surplus or deficit of inventory compared to normal. How many homes are there for sale? And what I'm finding, folks, as I look at this data, is that south of Dallas, we see these zip codes in red. And also out in Arlington and Fort Worth, we see these zip codes in red, where there's just way more inventory than normal. 94% more listings, 97% more listings. Heading out into Mesquite, there's 2 times as many listings on the market today than there are normally. So these areas in red, folks, these are my picks for the neighborhoods in the DFW metro to get hit hardest in 2024 by price declines. This is where the inventory is going up the most. Meanwhile, we actually see that in some areas north of Dallas, we still have a big inventory shortage here out in Valley Ranch and Capel and University Park and Highland Park. The inventory is 46% below the long-term average, and the home price forecast score on Reventure app is predicting that prices are still going to go up here in Highland Park over the next year. And so if you are a buyer or an investor or a homeowner in the DFW metro or anywhere else in America, you have to understand what the data is saying about your housing market down to your zip code and neighborhood. Because there's big differences that are cropping up even just a couple miles away with what's happening in the market. And overall, the trend I'm seeing in Dallas, everyone, if we zoom out and look at the inventory surplus deficit, we can see there's a big correlation with income. If we change the map to median income, we can see, it's the areas with the lowest income in blue that have the biggest inventory surplus on the market in red, and where prices have actually dropped the most since mid-2022. So that's the other thing to pay attention to, is how much prices have dropped already from the peak. We can see out, for instance, in Southeast Dallas, out in Ferris, prices already down 8.3%. Some areas south of Fort Worth, prices are down 6%. Heading up to Saginaw and Eagle Mountain, prices are down 7 to 8%. And then up in Aubrey and Melissa and Anna, prices are down 7 to 9%, as well as in Princeton. And so we actually already have a pretty heavy correction going on in this, let's call it suburban to rural ring in blue. This is where the home builders really go crazy in Dallas. I talked about the investors before, but the builders are also really active in these zip codes as well. And the builders have been most aggressive on cutting prices. Whereas again, we zoom in here on northern Dallas, kind of these nice suburbs to the north, we can see prices are still up from the middle of 2022. And ultimately, the trend there is, if the inventory is lower and the incomes are higher, there's just going to be more stability in that local housing market. So that's a framework I want you guys to start thinking about as a buyer and investor. A lot of you guys are looking and saying, what are areas that are going to be more stable and withstand this downturn? It's going to be areas with higher income and lower inventory, as well as less home building. Because the home building piece in DFW is huge. It's a big reason why the listings are going up in a lot of different areas. If we go back to Reventure app and we look now at a metric called housing unit growth rate, we can see where are the housing units being added in DFW, housing unit growth rate from 2017 to 2022. Well, we can see actually the number of housing units is contracting or growing very slightly in these areas, in these wealthy suburbs north of Dallas. Whereas if we go far out east, we can see 50% growth rate of housing units in Princeton. 130% growth rate of housing units up in Celina. And so I'm skeptical of these locations in DFW where the housing unit growth rate's huge, basically where the builders are going crazy. These are areas where I'm fearful that we're going to see declines. And again, we can just compare the housing unit growth rate to how much prices have changed, and we can see big inverse correlation. The more housing units being built, the more the prices have dropped the last year and a half. Now, I don't want to be too negative on Dallas and DFW. While I do think there's going to be a correction, and I think that correction is going to be on the order of anywhere from 20 to 30% over the next several years in certain areas, I do think in the long term, let's call it the 5 to 10 year window and time frame, I think Dallas is a good place to buy. Because one thing that's undisputable is that this is an area that's growing and growing fast. Lots of population growth in DFW, particularly in Collin and Denton counties, where you can see in Collin County, the population growth rate over the last 5 years has been 20%, which is crazy, everyone. 20% growth rate in population in Collin County, 17% in Denton County. Actually, if you go to Kaufman County in the southeast, 40% population growth, 22% population growth in Ellis County. I mean, folks, if we zoom out here and actually look at the map of America, we can see that what's going on in Dallas in terms of population growth is very rare. If I actually go to the filters section here on Reventure app and I say only look at counties with over 100,000 people, and then we go to table view and sort them by population growth, what do you see? We see lots of Dallas counties. We see number one, Kaufman County is the number one population growth rate county in America, for minimum 100,000. We also see Rockwall County is number 3. Parker County is number 7. Lots of Texas on this list in general. And so we have a huge cluster of population growth here in the DFW metro, which is going to be a strong long-term driver of the area and of the housing market. But again, it's important to think of this in terms of time frame. Because while I think over the next 5 to 10 years, Dallas is a good place to buy, over the next 1 to 2 years, I do think we are going to see declines in the market. And if you buy now, you could be catching a falling knife. You could be buying into a market that's going to go down 20 or 30%, and you might hate yourself in a couple of years if you do that. You could be underwater on your mortgage, particularly in some of those super high growth counties. Because if we go back to this map, and we just take a look at the inventory surplus deficit again, what do we see? Where is the most inventory in the Dallas metro? Well, it's actually in these counties that had the highest population growth. Like in Kaufman County, that's the number 1 population growth rate county in America. Yet the number of homes for sale is up to 823, which is the highest level on record, and it's almost 40% more than long-term average. Kaufman County has a home price score forecast of 30, indicating that prices are likely to go down over the next 12 months. And so that's something I just want you guys in Texas to understand, is that yes, the population growth rate is high. People are moving to Texas. Jobs are moving to Texas. Companies are moving there. But realistically, that level of growth has slowed down considerably since the peak of the pandemic in 2022. It hasn't gone away completely. It's not like people net are leaving Texas, but fewer people are moving in than during the pandemic, while the builders are still building lots of homes, while the investors are starting to be forced out of the market. And it's those trends of the builders building the homes and the investors being forced out of the market that are going to matter much more over the next couple of years than the levels of population growth. And folks, I actually lived in Dallas for about a year. In 2021 and 2022, I lived in Dallas. I split my time between living in Victory Park towards the center of Dallas between uptown and downtown. And then I also lived in Frisco for 6 months. So this is a market I'm pretty familiar with from an on-the-ground standpoint. And the one thing I just remember the most from being in DFW, particularly up in Frisco, is how much home building there was and how so many of the home developments looked identical and how so many of the houses were built like 2 feet from each other. That was the one thing I couldn't wrap my head around, how people in Frisco were willing to pay $1 million for a 3,500 square foot house that was literally like 3 feet from their neighbor. With a lot of listings looking like this, everyone, take a look at this listing I found. You can see it's a $999,000 house in Frisco, and you can see it's got a pool, it's big, but it's like right next to the neighbors here. $999,000. It's a 4-bed, 4-bath. They actually already did a $100,000 price cut, for a house that Zillow thought was worth 830 grand. So clearly these people just listed way too high. These are sellers that just didn't have really much of a perspective on the market. And one of the issues here is how much the monthly payment's going to be, because the property taxes in Texas are high, 1.7% after the recent tax break. So if you were to buy this house with a mortgage, you'd have to pay around $7,000 a month for your monthly payment, which is a big, big issue. Locals here, yeah, I know there's affluent people living in Frisco and northern Dallas, but this is still a really hefty payment. It's $84,000 a year. And so ultimately, I'm skeptical that people are going to pay those prices and mortgage rates for much longer, especially with inventory surging across much of the DFW metro. So here's what I would encourage you guys to do if you're a home buyer investor wanting to learn more about the Dallas housing market. Head to www.reventure.app and go ahead and type in your zip code in the DFW area or any zip code in America, actually. And you can start immediately researching the home price and inventory data in your market for free. And from there, start checking out data on the inventory surplus and deficit to see how much forced selling there is. Take a look at overvaluation rate to see how much home prices could decline into the future, the risk of price declines. And also check out the Reventure home price forecast score so you can get a sense of whether it's a seller's or a buyer's market and if prices are likely to drop in the next 12 months. To access all of that data, become a premium member on Reventure app for $39 a month. You guys can cancel that membership at any time and it gets you access to all of that data so you can make a more informed decision about where and when to buy a house or investment property in the DFW market.